Hi, everyone, and welcome to the third segment of AEC-tech Talks. These talks are organized by AEC-tech, a platform and community established to help you keep updated and engaged with the latest technologies in the building industry. Today, we are joined by three great panelists who are all experienced investors in the AEC space. We are going to learn from their experience investing in design and construction startups, and we'll also ask them for their insights on the future of innovation within the built world. This event will be recorded and saved on AEC-tech YouTube channel. If you have any question for our panelists during the event, please feel free to post them in the LinkedIn or YouTube chat box, and we will do our best to answer them in the Q&A portion at the end. I'm going to briefly introduce our three wonderful panelists now, and we'll let them talk more about themselves and their work. I'm going to start with Sharyar. Sharyar Shams Ansari is an investor at Brookfield Growth, where he invests in growth stage companies across software, hardware, and marketplaces with a focus on areas including PropTech, fintech, insurtech, and travel. Thanks, Sharyar, for being here, and welcome.
Thank you so much for having us, Nick-Naz.
Of course. Our next wonderful panelist is SoFiandou. Mari is an investor at Fundamental, focusing on early stage construction tech companies across the globe, APAC, North and Latin America, and Europe. Thanks, Mari, for joining us, and welcome.
Hi, Nick-Naz. Thanks for having us. Great to be here.
Of course. Our next panelist is Vaishak from MetaProp. Vaishak is an investor at MetaProp Ventures, where he focuses on both early stage and growth stage investment opportunities in the broader real estate technology landscape. Thanks, Vaishak, for being here, and welcome.
Thanks for having me, Nick-Naz. Great to be here.
Our pleasure. So I'd like to start the conversation by asking all three of you the same question about your background and how you ended up working as a VC, and why it is that your company and what your company and fund is focused on and is about, and why it is that it's focused on building tech, why you find it exciting. If you can also tell us how you usually discover and keep track of the latest emerging technology in the built world. We can start by Sharyar and move to Mari next time, Vaishak.
Sure thing. So maybe just kicking off with a quick background on myself. I entered the venture capital industry in 2017 after a stint in investment banking. And I've just always been really passionate about technology and passionate about growth. I think that we have some of the most interesting jobs in the world, getting to sit across from founders that have just limitless enthusiasm for what they do. And I find that passion and enthusiasm to be pretty infectious. So I just love the energy involved with the industry and getting to work with such smart, enthusiastic, excited people every day. I'm an investor at Brookfield Growth. We are a growth stage, so typically Series B+, built world investor, really investing at the intersection of technology and where Brookfield owns and operates assets. So that looks like a lot of built world end markets, from real estate to infrastructure to renewables, private equity, credit, and insurance. I have a pretty interesting role at Brookfield that really consists of connecting our Brookfield operators to best-in-class technology companies in each one of those respective end markets and creating operational partnerships between the two, and then subsequently investing behind a subset of those operational partnerships. My team invests out of a $500 million fund, and I think just to get to kind of the last part of the question around how we're often finding these kind of best-in-class companies. For us, it's really a dual-pronged approach. I think a big part of it is talking to other great investors and folks like Marie and Vaishak and kind of exchanging what we think is interesting in market. But there's also, frankly, a lot of noise in the market at the moment. So the key is finding a way to really effectively triage opportunities up front. So we lean pretty heavily, actually, on our operators as well to guide us in directions where they're seeing really interesting technologies that Brookfield might be rolling out on the operational side. So that's sort of how we think about, sourcing opportunities.
Wonderful. Great. Thanks so much. Thanks for sharing that. So Mari, how about you?
Sure. Yeah, I'm in the investment scene since 2019. I actually have a mechanical engineering background, was always more focused on like the business development side as well as like production planning, and somehow slipped into the whole construction scene. What I find really interesting about the whole industry is that I was always kind of driven by like what are the inefficiencies, how can inefficiencies actually be solved through new technology. And that's what makes me feel or happy to kind of be involved in this industry every day, because we kind of get to know so many different new solutions, new founders that have really the drive to really make a change to the industry. And I'm with Fundamental. Fundamental is the largest global fund that is focused on construction. What I love there is that we really have that global perspective. So not only investing in one region, but really from being based in Berlin, but actually investing more than 80% of our capital outside of Europe, be it in Asia Pacific or North America, Latin America, and really get to know all those different successful playbooks across the world, and also being able to kind of transfer those learnings across markets and apply them to the certain market conditions. When it comes to like the second part of your question, regards of finding new technologies, similar to Sharyar, as we focus a lot on like talking to other great investors that we also often collaborate with, but also highly depending on our network of industry stakeholders, talking to not just our LPs, but also like partners that are really deep in the field, get a lot of knowledge, like what are the pain points that need to be solved. And also our global perspective kind of helps us there to identify like, hey, what has been done in other markets? Where do we see kind of white spots in certain markets? And then look for new technology there.
Okay, great, wonderful. Thanks for sharing. Vaishak, how about you?
Yeah, so I'm definitely the newest to the VC space out of the bunch here. I've been at MetaProp for about a year now. I sit here on the investment team. Before MetaProp, I was at JPMorgan Chase, focusing on fintech strategy and partnerships. So just a quick intro to MetaProp. We're an early stage and growth stage venture capital firm based here in New York City. We invest out of 2 funds right now. We have 4 funds total. Our first 3 funds were early stage funds. The 4th fund is our growth stage vehicle. For the early stage space, we invest in pre-seed to Series B. And we really have a very broad look at what we define as PropTech or real estate tech. So really anything that touches the real estate value chain is fair game for us. And we'll invest across categories, so software, marketplaces, as well as hardware. So it's a very broad mandate. For our growth fund, we invest out of Series B to Series D investments. And it's actually a new fund for us. So it's a new growth strategy that we just kicked off a few months ago. So a very exciting time for us here. In terms of your question on sourcing, honestly, Sharyar and Murray took all the good answers here, but I think there's a couple of ways to really get good opportunities. And I think one of them is really just talking to other investors. So me personally, I probably spend the first half of my day just talking to VCs, seeing what's out there in the market, talking about what we're seeing on the market. But the other way, we have a very robust sourcing mechanism here, where we spend a lot of time talking to founders and talking to other operators. I think there's a lot of, I wish I had a list of resources where I could just go online and see what the latest is happening in the space. But honestly, you learn so much more from just speaking with the founder, a 30-minute call. You learn a lot more about what the latest pieces of cutting edge technology is in the space versus what you see online. But I guess that's a long answer to say there's a lot of different ways that I catch up on potential things that are happening. And sometimes one works better than the other, but it's a fun process.
Wonderful. So are there events or like conferences or webinars that you regularly go to, or not, like online or in person? All of you, or maybe Vaishak?
Yeah, so I would say there's always, I mean, we're here in New York City, there's always some sort of seminar or some sort of dinner or event for the construction space or just the PropTech space in general. I can't think off the top of my head any specific resources that we use, but really just, I think now that people are after the pandemic, people are able to go out there and meet with each other. We're able to get a lot more sort of meaningful connections with people in the space.
Okay, great. Mario and Sharyar, is there anything that you would regularly go to or check, like as far as events or?
I think there's a couple industry conferences, whether it's CRETech in different cities or Blueprint in Las Vegas, that folks will regularly attend. Some of those have different focuses, whether it's on the commercial side or the residential side. So I think there's definitely a lot of value to attending conferences. But I also think, that the point was made around dinners and just recurring events. Frankly, I think anyone tuning in today probably has a leg up on getting educated around PropTech. And there's a lot of groups like AEC plus Tech being such a great example, right? Where you can just find these communities of people that share these same passions, where you can just kind of exchange thoughts. And I find that to just be really helpful in sort of staying on the cutting edge of the market.
Yeah, sure. Great, Mari. Is there anything else you would like to add? Or?
No, I mean, I would agree with the two. For us, of course, having this global view, it's I would be traveling like probably all week if I would try to attend all meetings across the world. Having dinner outside. So yeah, a lot of is happening like online and like meeting certain groups. But I couldn't like think of like a specific event where we kind of regularly go to.
Okay, great. Thank you so much. So my next question for you is that, so design and construction industry is famously known for being a slow-moving one with regards to adopting new technologies. So are you currently seeing any sign of acceleration in tech adoption? What patterns are you seeing in the space, both in technologies as well as in founders that you feel confident investing in? So maybe this time we can start by Mari and then Vaishak and then Sharyar.
Sure. Yeah, I think there are like two things that we've seen over the past couple of years, right? One, of course, being COVID, which kind of unfolded in rather unanticipated opportunity for a lot of firms who are now trying to kind of also incorporate the whole working remote, making it more easy to access also information, to also collaborate, even though not sitting in the team together, and also being able to kind of augment some of the work. So I think there we see a lot happening, also with the shift to the cloud, and the whole pressure that has been put on the supply chain. So a lot happening there also in terms of like supply chains, marketplaces, where we see a very interesting shift and a lot of stuff happening. And the other thing is there's probably one of the largest and immediate problems that the industry is facing, which is the labor shortage, where we see a lot happening there, especially because when you look at the numbers and the statistics, I mean, around 30% of the current labor force will retire over the next few years. But when you ask like younger generation, there's only like 1 to 2% who could even imagine like joining the industry. And that's not like just on the construction side, but also we see this kind of lag shifting also towards the back office. So there we see a lot of things happening exciting things happening in terms of like automating a lot of the back office administrative work, be it budgeting that has been done based on pen and paper, where we see that also a lot of like companies, also a lot of like SMB companies are now kind of adopting new technology and are more open to take on new technology.
Yeah.
And then on to your second question in terms of founders, it's quite interesting, right? The space is a very kind of nuanced industry where you can't like just jump in and put a product onto a pain point, but what we see with founders is that those founders who really are successful and that we also like to work with, they have a very high level of appreciation, not just for the pain points, but also for their customers. They really need to be like kind of down to earth, be relatable. You can't just walk in there and tell them like, hey, that's how you're doing it, but that's wrong. Like that's the way you should do it. With that attitude, you don't get far. And where we see a lot happening, or the greatest founders who really don't shy away from like getting their hands dirty, but really get down into the field, do a ton of research, and really have a huge amount of appreciation for their customers.
Yeah, that's a great point. The top-down approach doesn't usually work. The bottom up is always better, and that's a great point. That is also true for the founders and the way they work. Awesome, thank you. So Vaishak, how about you?
Yeah, I mean, I think in general, you're just seeing this massive shift to software in these last 12 to 18 months, not just in construction and PropTech, but really across categories. But I think especially in sort of the real estate space, for the longest time, there was this don't fix it if it's not broken type of mentality. And that's kind of gone out the door in the last year or two. And a lot of operators realize that software actually makes their lives a lot easier. And so I think even within construction, we've had an interest in a lot of different specific subverticals, some verticals that maybe you don't necessarily think of when you think of construction. So construction finance is really interesting to us, just opening up different marketplaces where lenders and construction operators can get access to capital. So that's something that we spent a lot of time on. When it comes to sort of sales enablement, maybe that's a little bit past the construction value chain, but we're seeing a lot of really new and interesting technologies when it comes to the rendering space, so 3D rendering and visualization tools, the recent technological advances in lidar and photogrammetry, and we're seeing a lot of that being used for sales enablement, or just making the lives of construction companies easier. Also finding ways to sort of put the stack together and create a single source of truth platform. For the longest time, people have been using AutoCAD and Revit, and there are a lot of companies out there now like Mosaic and Hierarch that are trying to disrupt that. So we're seeing a lot of really interesting opportunities. I think your second question about founders, really, I mean, exactly what Marie said. I think finding founders that really understand a use case really, really well, those are the best kinds of founders, and those are the ones that get me really excited. Oftentimes people think that having a good management team just means having someone that's credentialed, and that's obviously great, but someone that's spent 10 to 15 years really trying to focus on a problem or being sort of the vendor in that problem, and now deciding to sort of build their own solution for that. That's the kind of founder that, they know where the bodies are buried, and they know exactly what needs to be done to sort of solve that solution. And those are the ones that really excite us.
Wonderful. Great. Thank you, Vaishak. Sharyar, how about you?
Yeah, I mean, is the end market accelerating? I'd say absolutely it is accelerating. And, one of the things that I really love about this end market is, despite the fact that it's so massive, we really are very early in its digitization journey. So a couple of the trends that we're seeing, amazingly, I think that to the point that was made around adoption of software, we're still seeing a lot of, frankly, like manual processes come online, whether it's record keeping, collaboration, other workflows. There's still a lot of design, construction, and real estate that is primarily offline, whether we're talking about an architect sampling process or a construction worker figuring out what they're supposed to do that day. So taking that online is creating a lot of opportunity for, better systems of record and collaboration. I think some of the project management systems like Procore have, taken a lot of share, but now we're increasingly seeing systems for every stakeholder, like the subcontractor. And as things go online, we're just seeing a lot more data in the space around when workflows are happening, when project milestones are being met. And it's creating a lot of transparency that's making different parts of the process a lot faster, right? Like the example of construction lending, I think we see a lot of fintech-enablement now that there's more data being collected in the space. The other interesting trends, I'd say, are the macro trends, right? So housing affordability is kind of going in the wrong direction here in the US. Demographics suggest that we're going to need a lot more housing. It's going to need to be cheaper. And what that means is we're going to need to build and design it much more efficiently. Is the answer prefab? Is it modular housing? Is it a more flexible workforce, software to run construction? It's probably some combination of all of those. But the need for these technologies is very real. So I think we will continue to see them grow. To the question around kind of founder suitability, I'd really echo what Marie and Vaishak said, just around kind of the characteristics of a founder. I also think specific to this end market, it's helpful, even if it's not the founder, to have someone on that senior team that has a lot of industry expertise, both to show that they kind of understand the use cases of the industry, and also because, frankly, it's a relatively small industry, and a lot of folks in the industry know each other, and it's easier to win customers if you have some of those pre-existing relationships in place. But I think the last thing that I'd say to founders is, I think there's a tendency that a lot of founders sit down with a VC and they're very focused on showing us what they know, which is great because they know a lot and they have a lot of passion for what they're doing. But what's just as valuable to us is seeing that they know what they don't know and that they have the humility to show us that and to hire around some of those weaknesses where they may not necessarily have that experience. So would give that as one piece of advice to any founders trying to break into the space.
Wonderful. Thank you so much. These advices are great. I'm sure they're going to be very helpful to everyone who is listening to us now. Okay, wonderful. So my next question is about innovation. So Please tell us what new innovation technology you found the most exciting in the last year. Some of you kind of touched on some of them. So what is it that you think is disrupting AEC in 2022 and beyond? So what it is that is standing out to you and you see as the most disruptive right now. So maybe this round we can start by Vaishak and then Sharyar and Mari.
Sure. Yeah, I mean, I mentioned it in a little bit earlier, but I think there's a lot of really interesting technological advancements happening in the rendering space. So whether it's using finding ways to use 3D modeling tools that are a little bit better than what they use in AutoCAD or Revit, or just operators and developers trying to find ways to sell their units faster through better sort of visualization techniques. I'll do a shameless plug here, but a company that in our portfolio that I'm really excited about is a company called Stage Glass. And basically what they do is they use photogrammetry and lidar and have basically developed a hybrid point cloud solution to create renderings that are photorealistic and that are very, very, very pleasing to look at and can be done in a very automated way. Those are some companies that I think are doing some really interesting things, and that sales enablement focused leasing teams are going to be really, really impressed with when that technology really gets to market. But yeah, I think there's a lot of stuff going on in that space. There's also obviously the artificial intelligence realm, a lot of construction applications happening there. So I think there's a lot of different avenues that are really interesting.
Wonderful. Yeah, rendering and visualization for sure. I remember doing all those renderings and bringing all those like entourage and like trees and all that manually, and it's such a tedious, work. And it just doesn't make sense that you have to do all that manually.
Right.
And it's so amazing to know that there are companies who are working on automating the process. Great, thank you. So Sharyar.
Yeah, I think one technology that I found really interesting that's really creating a lot of buzz in the space is a digital twin. So basically creating a digital copy of a building and all of the different systems inherent in that building to do things like track performance of the building around ESG, sustainability, and utility usage, and ultimately over time to be able to improve and automate it. And one company I'd be remiss if I didn't talk about here is actually one in our portfolio as well. It's called Passive Logic. And what they've been able to do is build a digital twin framework around general autonomy for buildings. So effectively what their technology does is it can map a pre-existing building and quickly turn it into a digital twin. And from there, they've actually developed everything that requires that building to run autonomously, from the wire box down to the actual ambient sensor. And they apply this technology to make buildings smarter and improve things like energy efficiency. And where this gets me and the team really excited is as you think about, the push for sustainability in the real estate industry and how much of global emissions come from the real estate end market, this is going to be absolutely critical as one of our main levers in the fight against global warming. And historically, BMS systems that have tracked this type of performance have only been available to buildings that call it over 100,000 square feet. Passive Logic is one of the first systems that's really applicable to a building of any size. So as you think about the massive number of smaller, inefficient buildings out there, this can be a really powerful tool as we kind of drive towards sustainability.
Wonderful. Yeah, digital twin is definitely a big one. I attended I was part of a conference last week that was focused on digital twin. It's definitely a disruptive technology. Thank you, Mari.
Yeah, for me, there are two things. So one is that this industry is like still working in so many silos, and all type of kind of technology that kind of breaks off those silos, be it either in the design space where that kind of allows different design tools to talk to each other, so different design software to actually be interoperable. Companies like a Spackle, for example, that I think you also have on your platform, AEC-tech, but also that kind of continues along the whole value chain, right? So be it in procurement, where there's a lack of like finding actually information. I mean, how much time do designers spend on like actually researching product information, putting together their spec sheets, and then following up with like each manufacturer or retailer that they have to call for prices. So everything that they're kind of allows a higher degree of collaboration and kind of breaks off those silos. That's one thing that I'm really excited about. in the space. And the other thing is there has been a lot of software over the last couple of 20 years, probably even the legacy software that has been developed and applied in the industry, but which is, most of them have like kind of overlooked the long tail, the small SMB companies that actually represent the majority in the industry, and which are often not either too expensive or kind of too complex for those smaller companies to use. So everything that is kind of now focusing on also the pain points of the really smaller companies that add so much kind of value to the industry and are also responsible for the most of the value created. This is stuff that gets me currently like really excited. So yeah.
Great, wonderful, thank you. Yeah, interoperability is definitely another one. Thanks. So my next question is about the fundraising process. Okay, this is a really good one. So we hear every day in the news and on our social media pages how startups are raising like millions, and there is hardly any way that young founders can learn about the process. So how does this whole thing work? How are you supposed to like reach out to the right people? How do you know the investor is the right investor for you? So, and then how can you avoid all the like errors? Is it really gonna be like a try and error process, or there is a way to learn more about it? And the second part of the question is, at what point should a founder plan for fundraising and look for investors, and how we can connect to the right people? So we can start by Mari and then Sharyar and Vaishak.
Sure. I mean, I start by the second part of your question, like when is the right time to start? I think, especially when you look at like the very first fundraise, the right time to go out there is really once you are confident with your story. So you've done a ton of like research and diligence on your end and have a clear understanding of like, hey, what are the pain points that you're actually solving for? Who will be your target customer? Have an understanding of like, hey, or an hypothesis on this is going to be my go-to-market, but have like a clear plan already. And then on the second half, or the second part of your question, in terms of like, what are the best ways to learn about the fundraising process? I think it's like with many things in life, right? It's either own experience or learn by secondhand through other experiences. So talking to other founders, I think, is a great way, but also to investors. And what we've done internally is actually like put together and write up some kind of a manifesto where we kind of collectively put together all our experiences that we collected with our portfolio firms, but also with the founders that we have in our network, and put together some kind of like playbook that we then hand out to our early founders or young founders that we work with together, to help them really how to kind of build also up the storyline, who are also the other investors that are really interested in the space, who have an appreciation for the industry, who also understand their story. Because a lot of times when you tell 10 people the same story, probably there are 10 different interpretations of your story. So it's always important to also find the right partners that you want to work with that can not only add value to you, but also really understand your vision and what you're actually planning to do. And that's what we try to do then with the founders that we connect with, and really help them find the right partners and kind of help them on their journey of going out for the fundraise.
Great. Is the manifesto available online, or is it on your website, or is just accessible to companies in your portfolio?
So we kind of wrote it for the companies in our portfolio, but we are also kind of looking to share that also with the young founders that we have like high conviction in, but we haven't put it like online or something where it's like publicly available. Okay. But I'm happy if any founders want to reach out and have a discussion about that. Just reach out to us and we can have a talk.
Okay. Great, thank you. And does it matter to you if the company is pre-revenue or is already making revenue? Is revenue a big deal for you when talking to these young founders or not?
So we can go like super early. We also have done a ton of investments where we actually invested pre-revenue. I think the earliest investment that we've done was basically just a founder and a pitch deck. There was no real business there, so the company was incorporated after we invested. And so it doesn't always doesn't always matter if there's already revenue or not. It always kind of depends on the stage of the company, also how familiar we are with the market and how much value we think we can also like bring to the founders and help building this business. So in the very early stages, it's really about like how good do we understand the space, how much value can we provide, and how much do we also like the team.
Great. Thanks so much. So Sharyar, how about you?
Yeah, I think to learn about the fundraising process, it's really helpful first off to join talks like this and groups like AEC+Tech just to meet similar-minded people. And that's kind of how you get to meet maybe some of those mentors who've done it in the past and kind of been through it, and you can learn from some of their mistakes. I think you raised an interesting question around like, is it really just trial and error? And frankly, I think that for most people, it is trial and error. And a lot of people don't succeed on their first venture. And that's not necessarily a bad thing, right? They have a lot of learnings that they apply and, come back better the second time. But I think the way to shortcut that trial and error is by finding that great mentor. And, if you can't necessarily find them in person, we live in this great world of freely accessible podcasts and advice. And you can, get access to some of the best CEOs, founders, investors out there via some of their thought leadership and just figure out how they think about the world. So what I'd say is, find that mentor, that investor, connect with them, ask them about what they do. I think most people, whether it's a founder or someone sitting on our side of the table, is just really passionate about what they do and always happy to kind of have these conversations and help, even if it doesn't always come with an investment attached, right? We're just always out there to meet great, hungry people who are building exciting things.
Yeah.
In terms of the question of like what the right point is in the company's life to start looking for fundraising, I'd echo what Marie said, and that like you really need to know what you're selling and fundamentally make sure that you've captured the voice of your customer and can express your value proposition, not just clearly, but also concisely. But from there, I would say there isn't really one single clean answer. It comes down a lot to the founder, their personal financial position, how they think about, how much of the company they want to own versus how much capital they want to raise and how quickly they want to scale. And, the right point in that company's life, especially in this end market, where maybe bringing in more of a strategic partner could really be an inflection point for the company and drive growth. I think if you've never started a company before, you should probably do it as soon as possible in that company's life to get some of those mentors around the table, right? And just some of those early stage venture capitalists who've developed some good pattern recognition around what works and what doesn't at those early stages of a business. But, if you're a successful founder and this is your fourth business with 3 successful exits, maybe you can navigate more of that stuff alone. And, it becomes more after you hit product market fit and are thinking about hyperscaling. I'd say that VCs for the most part are pretty accessible and always looking to talk to founders. So if you find that your pitch isn't resonating, just, fine tune it and try again.
Great. Thank you so much, Sharyar. Vaishak, what do you think?
Yeah, I mean, echoing what Sharyar and Murray said, it's a great question. I don't know if there is one right answer to it. When it comes to sort of finding someone that can help you, I think it's always great to find someone else that has also raised around and can kind of tell you the nuances of the process. There's a lot of information out online, and all of that is really helpful. But at the end of the day, it's the founder that's gone through the process can tell you about how long it is and who to talk to and what the issues are and what challenges came up during their fundraising process. I think a lot of folks don't go into it with their eyes wide open. And I think that's something that's really important to do, especially in today's climate. There's a lot of capital out there. There's a lot of people that are looking to invest, and you want to make sure you're going about it the right way. That being said, I think, we live in a time where there's more resources online than there's ever been before. So do all your research, read up, watch all the videos, do everything you can. And that way you'll really be prepared. In terms of the when to start fundraising, I mean, there's a lot of schools of thought, and I think Murray and Sharyar touched upon all of them. Some people think you should always be fundraising even before you have your pitch deck. We invest very early. So we've invested in someone with just a pitch deck. I think we've invested in people without a pitch deck. So we try to be there for all stages of financing. That being said, you don't want to go to market until you really have your story tightened up and you know exactly what it is you're in the market for. I think a lot of folks do end up going in realizing that they went a little too early, or maybe they went a little too late. And by the way, it's totally fine to go into the market and realize that you have to change your strategy a little bit. That's a good thing, not a bad thing. But that being said, I think going into it with your eyes wide open, and it never hurts to have initial conversations with VCs or someone else that's done this process before. It doesn't have to be a formal pitch every time. Sometimes you're just grabbing coffee and saying, hey, this is what I'm thinking about doing and would love some advice on how I should go about with financing.
Wonderful. Thank you so much. So we have about 35 people in the room now on LinkedIn and some more on YouTube. I'm going to ask one more question and then I'm going to open it up to the floor. I have some more questions, and then if there is not many questions from the audience, we can continue with my questions. So let's see what I have here. So what are the more important factors for you when you research a particular product to invest in? And what is your process like? Do you ever talk to potential customers and users of that product? Do you just talk to the founder and the team? So what the process is like? We can start with Sharyar and then Mari and Vaishak.
Sure thing. I'd say that generally speaking, we look for a really strong team in a large addressable market with really kind of sustainable and compelling economics within the business. The typical process for us is, getting to know the founder and that team, having a couple conversations, digging into the economics of the business. And then in the background, we're doing a lot of our own work, right, around sizing the market, figuring out how it stacks up to other competitive players, some maybe that we've seen, some that we'll talk to other investors about that maybe they've seen. And a big part of that actually is talking to the customers, right, and figuring out how do the users feel about this product. Sometimes we'll ask for customer introductions. I think, oftentimes investors will do back channeling of their own, especially in a smaller industry like real estate where a lot of folks know each other. You'll do some kind of references to figure out, do people like the product? How do they feel about it? Is it headed in the right direction? And we try to learn as much as we can outside in about that founder and team to supplement the conversations that we'll be having with them. I think the last, piece that becomes really important, and obviously we build, forecasts and models and look at how things are trading in market. But one of the things that's become a lot more important lately in this environment is that the macro, frankly, matters a lot too, right? So there's a lot of those questions that maybe aren't quite as related to the business that your investors will be asking themselves, like how do interest rate fluctuations impact your business? Geopolitical uncertainty, a tight labor market or a tight capital market, right? I think most of us on this call here have been lucky to primarily be investors in a time where capital markets have been pretty flush. With all the uncertainty and volatility that we see in the market today, we may see a bit of a contraction over these next couple of years. So just figuring out, how this team and how this business would be able to respond to some of that uncertainty becomes more important than it would have were we having this conversation in 2019.
Mm-hmm. Yeah, great point. Thank you. So Mari.
Yeah, I mean, very similar to what Sharyar mentioned. So in terms of like deep market, team, very important, but also in product side. So of course we talk to a lot of like customers, not only existing customers, but also like potential customers, really understand if this solution is really solving like a deep tissue pain point, and if that's like really kind of is it a vitamin that's kind of milding the symptoms, or is it really a curative problem? That's what we try to really understand. And as well as a second point is what we see is that a lot of companies have a really big vision, but you have to start somewhere, right? And so often the solution that we look at today is not the solution that will look like it will look like in 10 years or 5 years from now. So what we also try always to understand is really how they are trying to expand the market, how they are trying to kind of add additional value, and what type of potential do we also see from the conversations with the customers, but also like industry experts on how maybe something else can be built on top, right? So be it in terms of like, if you look at an expense management, can it be built on top and financial or an underwriting system for actually also then providing loans? So there we try to understand really what the market looks like and what also not just the technology today, but also the technology in the future could look like.
Yeah, great. Thank you, Vaishak.
Yeah, I mean, I would categorize it in two different ways. At least from our perspective, we look at it in two different ways. So one is the early stage perspective, where we're looking at pre-seed to Series A opportunities, and then there's a growth stage category for Series B and later. So I'll start with the early stage. Basically, everything what Marie and Sharyar said. We're looking at the fundamentals, at the market size, looking at the use case, the pain points, the management team. Also the technical talent. So how well equipped are they to actually solve the problem from a software development perspective. We also look to see if, hey, how can we add value to this kind of deal, right? Because if it's an early stage founder, they're looking at us as a strategic VC to actually help them with finding customers or helping them identify the solution and or maybe sort of add some more nuance to the pain point. So we definitely try to keep that in mind as well. I think it's tricky because you don't have a lot to go off of. So you really have to look at things that are qualitative, and you don't have a lot of numbers and trends to really to base your conviction off of. Customer calls are super, super important. That they're maybe number one or number two in terms of helping us develop conviction. Because we're as VCs, we think we know everything, but we really don't until you actually talk to someone that's in that industry and is actually using that product. And oftentimes we'll make decisions based off of a couple of calls that we've had where we really just sort of had our eyes opened up to something because of that call. So going to the growth stage, honestly, in some ways it's almost easier from the growth stage because you have years of at least 2 to 3 years of traction to go off of. And at that point, it almost becomes this like looking at the numbers and you can almost kind of develop conviction just by doing that. Right. So you can look at top line revenue. You can look at growth over the last 2 or 3 years. You can look at what their margins are and how those margins have expanded. How many of their customers have they kept? How many of those customers have been churned? And then we'll go deep into customer calls, both with existing customers, but also churn customers that have used both products. What are the features set and where are they? What are the points of the product that are more stickier than others? Forecasting, modeling, et cetera, all the above. I think that's what becomes more important in Series C and Series D opportunities. Series B is still almost kind of an extension of Series A, but it becomes, I think, a little bit easier as you go to the later stages to see who's really best in class.
Great. Awesome. Thank you so much. So now we're going to open it up to the floor. So dear audience, please feel free to post your questions. And then in the meantime, while we are getting questions from the audience, I'm going to ask one more. So did you ever refuse to invest in a company and then later regret your decision? So this is the first part. And the second part is tell us an investing success story that you decided to invest in one company and then later on you were really happy about it. So maybe the first part first, regretting your decision. Has it ever happened to any of you?
I think just about every VC will have some misses in their portfolio, right? Just over time, it's the nature of kind of the game that we play. Is you see so many companies, and sometimes, unfortunately, we don't get everything right. Mine was a restaurant POS business that I had the opportunity to invest in a couple of years ago. I think the lesson I learned was at the time I was frankly overly concerned about the valuation of that particular business. I've had a lot of different mentors with a lot of kind of different frameworks around value over the course of my career. And I think one thing I've learned is, when you're faced with a truly special company where every one of the metrics and the economics are really off the charts and clearly like not even top quartile, but top decile, it's tough to overpay for a business like that, right? Obviously within reason, but maybe that same analysis of historical multiples and stuff isn't as relevant as it is when you're investing in a business with more typical metrics. So I think that, fantastic businesses go for a premium really in any market. And I wish I'd known that sooner.
Mm-hmm. Yeah. So Maria and Vaishak, how about you? Do you have any regret story?
I wouldn't call it regretting the decision, but like, have there been companies where we maybe decided to wait a little bit and later on thought like, if we had invested earlier, yes, definitely. I mean, we are in a space, especially investing early stage, where we are always under like limited information. We always make decisions under limited and uncertain information. A lot of things are still like evolving. A lot of things are changing in those businesses, and they are changing quickly. And so I feel like, yes, of course, we are kind of making this decision under really, really crazy circumstances. And I feel like so far we have made, or I feel comfortable with the decisions that we made at the information point that we had at the point. And what we are trying to do in those cases is then really to kind of stay in touch with the founders, stay close to those founders, and really re-engage also for next rounds, and then come in later, at a later point. Maybe then, of course, at a higher valuation, at a higher price, but really be involved with those founders, because I think that's one part that maybe also a lot of founders don't realize, that it's just because we pass on a certain round doesn't mean that we fully pass on the company, right? It's just sometimes not the right time for an investor to come in at this point. Maybe because we feel like there's something missing to really build a conviction what will come over time, or also just because we feel like at a later point of time we can add even more value to the company. And so I think that's how we kind of try to balance that. Then stay close, also follow up with the companies that we passed on regularly, to then make sure that we can come in at, for us, the right time. It makes sense.
Great, thank you. Vaishak, how about you?
Yeah, I mean, echoing all those points, we never try. We try not to ever shut the door on an opportunity. It's always just, there'll be another chance at another financing that the company raises. So it's hard for me to think of any particular companies that we've missed on that I feel like those opportunities won't exist anymore. I think there's always an opportunity with every company. And I think the best founders also think the same way, right? They always think that, maybe an investor wasn't right for them right now, but they could be at a later stage of their company. So I try not to think that way. That being said, I think there's always categories that, especially if you're, some of my buddies that are in more generalist funds will always say that there's categories that they missed that they wish they could go back to. I think, us being sector specialists, there are still some subverticals within PropTech and real estate tech that we maybe didn't think too deeply about in the past, and now have seen those categories have some success. It's hard for me to think of any off the top of my head right now, and I'll probably think of it right afterwards. But I think there are always little verticals that we don't really understand how fast they're going to grow, and then we see them kind of explode.
Great. Thank you so much. So Kayan Rahimzadeh has a question about, how do you consider risk and liability for building tech? For example, if software causes problems on sites, like bodily injury or property damage. So any idea on that? How do you consider risk and liability for building tech?
I think it's a good question. It's something that we'll always pose to the founder or to the management team to sort of understand what the risks are, for especially if it's an on-site focused technology that could potentially have some risks for people's safety. But I think for the most part, whenever we see these opportunities, they're always around improving the safety or improving the efficiency of a job site or a construction site. So it's rare that we see technology that we think would cause or would have a huge risk factor. So I personally haven't come across anything that's potentially that risky, but it's always something that we ask our founders as we go through the due diligence process.
Okay, wonderful. So there's a question from Jennifer Liu. She has several questions. So the first one is, how do you find partners to start a business? Or do you just do it as a sole proprietorship? And her follow-up question is how to find out if there is a market for an idea.
Yeah, happy to take a stab at that.
Sure.
I think in terms of finding partners, it goes back to some of what we've been saying around just like attending the right events around the industry to find the people that have the same passion and drive that you do for the problem that you're looking to solve. And then just finding those people that that you work well with. You'll hear different things from different founders. Some of them love working with longtime friends. Others prefer not to mix friendship and business. You know, different things work for different people, and it's about finding out what works for you. The other thing is don't be afraid to lean on your investors, right? Like most early stage investors have pretty robust networks of either search firms that can help you find the right executive or of the executives themselves, right? So if you go to an early stage firm with a really compelling idea, but you need that rock star CTO who can help you actually realize it and code it, right? Oftentimes they'll have a couple CTOs, whether it's from past investments or just folks that they have in their networks that they're happy to introduce you to, and that's a great way to get connected. Also, I think a lot of accelerators and incubators will do that type of matchmaking as well. So that's just another channel to kind of meet those right partners.
Wonderful. Thank you so much. Any other comments, Mari?
No, I would definitely echo that. There are some great kind of also communities where it's really just about like finding a co-founder, finding someone that you can really work with. I think those are also helpful because you find like like-minded people who also want to start a business, and they also can like find someone who maybe is also like complementary to your skill set. So I think that's important.
Yeah, I think complementary skill sets is really important, right? And you can have someone that you love working with, but you do want to find someone that can help you solve that problem a little, or raises the average of your abilities and help you solve that problem better than you would if you were just tackling it yourself.
Great. Thank you. So Al is asking about investment sizes. What are your investment sizes for a seed round? How do you value a startup? Any idea on this?
I'm happy to take a stab at it. I think our average check size on the seed stage is around between 1 and 3 million, but we go up or down on a case by case basis. That's for seed, and I think seed rounds have definitely ballooned up in the last couple of years. Pre-seed checks, and they can be very small. And I think the other question is, how do you value a business? It's tough to really value an early stage business. We can kind of look at precedents and see how some other similar deals in the space how those deals were valued. Oftentimes it's really just kind of you working with the founder to come up with a valuation that feels right for everyone.
Thank you. Mari, Sharyar, any other comments?
Yeah, so in terms of like the round size of a seed round, I have seen so many different or a huge range in terms of like the round sizes of companies. Always depends also like of the background of the founders. I mean, when you have like ex-unicorn founders starting a new business, they usually raise a much larger seed round than maybe a first-time founder, right? Also, when you look at different markets, so in Europe, the rounds are usually still a little bit smaller than, for example, if you compare it to the US, or also in Asia, it's a little bit smaller. General ticket size can therefore also vary in terms of like whether you lead or you don't lead. And then on the second question on like how we value a company, I second Vaishak. It's a very big combination of a lot of different factors that you have to count in there, be it dilution, be it the market size, the background of the founder. So there's no generic answer to that.
And for us, I'd say, we typically aren't investing at the seed stage, but I'd echo what Marie said on the range of seed stage rounds that you see these days. Some of them are quite robust, but typically you'll double click into it and it'll be someone that was, an executive at a big public company previously or something of that nature. I'd say just to offer a bit more of like the growth stage perspective, right? So I'm typically investing in businesses at more than like 10 million of revenue. at that stage, to the point that Vaishak made earlier, when you do have a couple years of metrics, those are primarily what investors are looking at when they're valuing your business, right? So we'll be typically doing some combination of pricing, obviously the potential of the team and the size of the market, but also really looking at like what are the most comparable companies in public markets, what are the most comparable transactions that have been done in private M&A over the last couple of years, what are other rounds we've seen for similar businesses at kind of the similar stage, whether it's a Series C or a Series D, and using that sort of framework to figure out what the right value is based on the metrics of your particular business.
Great. Thanks a lot. So Sumant Kachru is asking if you invest in international startups. So he says that he's incorporated in India, but he's planning to scale to other English-speaking countries, including US and UK. I believe you do, right? All of you. Okay.
Yeah, we certainly do. Again, we're a little later stage, but we're open for business in India, China, Latin America. Brookfield's a very global organization, and that carries over into our growth team.
Okay, great.
Yeah, same for us. So we invest all across the world. The only two big markets where we do not invest is Russia and China, but everything else is basically on the run. And also, like through the network, we also then try to help also our companies if they want to go global, right? To kind of build the right relationships with the right partners, also in the other markets that they're then trying to get into.
Yeah, we love finding models that have been successful either here in the US or somewhere else, and then it's being replicated in different parts of the world. So whether it's a home buying model that we see was successful here and is now being tried in LATAM or in Africa or Europe, that's all fair game for us. We haven't invested in India as far as I know, but we're always going to be looking at different markets or in the coming years. So you never know.
Wonderful. Great. And everyone is thanking you for all the great comments. Thanks for sharing your experience, your insight with us. So if there is no more question, I don't see any more question here. We can wrap this up. We have 2 more minutes. Is there any final comment you would like to share, or any final advice for all the young founders out there?
I would just say there's so much opportunity out there in this end market. Going back to what I think you've heard from all of us today, we're very early in the overall innings of this kind of digitization journey and technology journey as we think about the AEC space. So really exciting to see this kind of young cohort of founders and what you guys are able to do. And please do reach out to us and let us know how we can help.
Exactly. So second that, and saying like, don't hesitate reaching out. So I feel like a lot of young founders, especially, they are hesitant that they maybe are not ready yet to reach out. But I think, as Vaishak also said earlier, we don't always need to do through kind of a pitch already or at the first meeting. Like, just call us, reach out to us. We can grab a coffee, be it digital or in person, and have a little bit of a conversation, get to know each other, and then kind of already build that relationship for then the future stages when founders are then ready to kind of raise funds.
Yeah, totally. I was pleasantly surprised coming into the VC space to see how open-minded everyone is. So don't hesitate and feel free to reach out to whoever it is you think would be helpful for you.
Thank you so much. Thanks to the audience for being with us. Thanks to our 3 wonderful panelists for your time, for accepting to be on the panel. I really, really enjoyed the conversation. I'm sure everyone else enjoyed it as well. The video will be saved and was recorded and will be saved on our YouTube channel. So thanks again and have a wonderful rest of your day.
Thanks so much for having us.
Of course. Bye.